Bismillahirrahmanirrahim. Malik, business and management consultant by profession, educationist. In my previous talk, I have talked about how to be entrepreneur, self-employed, and I've gone through the whole details, right from conception of an idea, deciding what to do, and went through all the processes. Now, you have a business, you have started a business, you have invested your money in that. Now you have to make that business a success. Now, in order to make any business a success, the important thing is the management, how to manage it, how to control and manage all your business activities, daily routine, everyday basis. Because business is a very challenging proposition. The circumstances keeps on changing, and there are many external forces which impact your business, and as a result it can reduce your sales, your profitability, your reputation in the marketplace. So in order to maintain your business and run your business on sustainable basis, we have to take some actions on daily basis. And that is called managing your business. So first of all, you have to manage your sales on a daily basis and keep a proper record of that. Everything should be properly documented. At the end of the day, you have to review your sales, whether it's a service business or it's a product selling business or maybe manufacturing. That means how much your sale is. The sale is not only in terms of monetary value, in terms of money and dollar value, but sale is also the quantitative analysis at the same time. That how many product or items you have sold. Because this is the real measurement of the growth of your business. The number of items sold, the number of hours service provided. Its dollar value keeps on changing because of the hike in price. If you increase your sales amount by few dollars, then your sale will go up. But that is not the real the value. The real progress and the real value is that how much you have sold in terms of quantity, numbers, not in terms of the money. So you have to maintain a proper record of, there's a quantitative record, I mean how many items you have sold per day and what is their monetary value in terms of dollar. So you have to see the trend on daily basis. If your sale is increasing on daily, maybe very slowly and gradually, that is a good positive sign that your business reputation, goodwill, and is increasing. You are getting more customers, also getting a repeat order, and that is a real test. And that is the real progress if you are getting a repeat business from your previous or existing customers. And then at the same time, how many new customers you have added. That shows that your publicity, your advertising campaign, your brand name, or your quality of your product or service is being accepted by your customers in the marketplace. That is a very strong indicator. And if on any day your sale has gone down, then that is a alarming situation. That means you have to find out the reasons why my sale has gone down today. What happened? Now we have to find out the reasons of the drop in sale. Generally, there are two reasons. Number one is called controllable, and other is called uncontrollable. Controllable reasons mean that within the organization, your organizational setup, something went wrong, and that could have been controlled. And other is called external forces or external reasons. And these are such reasons which are not controllable by you, because the external environment of your business, your competitor, your customers, the government policies, your suppliers of material and inputs, an act of God, maybe heavy rains and snows, and these kind of natural calamities, that they are the external challenges and external factors which are not in your control. We cannot control them. What we can do, we can forecast. We can keep on watching the trends. We can keep on watching the trends, the strategies and policies of your competitors. And you have to analyze them and see, are you going ahead of them or you are behind? If you are behind, then you have to find out why you are behind, and then you have to improve those weaknesses so that you should be ahead of your competitors, whether in terms of your quality of your product and service, or in terms of your pricing, in terms of your advertising and marketing strategies, in terms of your customer service, after sales service. So you have to analyze, and then necessary corrective actions must be taken on time. But the more important thing is that your internal environment, which is in your control. You have to find out the reason why your sale has gone down. What was the reason? Who is responsible? Because you have to fix the responsibilities. Identify, first of all, we have to identify the problem, the reason, and then do a situational analysis and find out what factors were responsible for this drop in your sale, quantitative as well as monetarily. So then fix the responsibility. Who is responsible? Which is called accountability. This is very important. So that these weaknesses or lapses or shortcomings, these should be fixed, and they should not be repeated. So when I say that we have to we have to fix it, and we have to introduce a system of accountability, and we have to have checks and balances. So if you are going to do the analysis of the situation, then why the drop? Sales was dropped. Maybe number one is the less items were sold. The question is why less items were sold. One reason could be that you did not have that much stock which can be sold. The question is why not? Okay, that means it's shifting the responsibility to another person or department. That means procurement. Those who are supposed and required to buy or procure those items which you are selling. And then you have to find out the reasons. What are the reasons why the quantity of the items are not sufficient in the store? That means you have to hold procurement department responsible for that. Why the required quantity was not purchased on time, while the certain level of inventory is not maintained, and why the reorder level was not checked, and if the orders were placed, why your supplier has not supplied you the required items on time. Now the procurement department or purchasing department, they come up with the reason. They say this is not our fault. We are all ready, but the finance department did not pay the accounts payable or did not pay the amount due to our suppliers. So that's why they refused to supply the required goods on time. They did not process your order because they first want their previous money to be paid. That means it's a finance department is responsible. They have not paid them, or they have not given us the required amount of money to buy the new items, to build up our inventory levels. Okay, now let's take the accounting and finance department into the task. Find out. And when you talk to the finance department or person who is controlling your money and finance, and okay, the guy say, it's not my fault because there was not enough money sitting in the bank account. Now who's responsible for that? Okay, say it's accounts receivable. Okay. So that means they have not received the credit sale from their customers who the goods were sold on credit. And they were given, let's say, 15 days credit or 30 days credits. So that means the money was not speedily collected from the customers. So, of course, now you have to talk to the accounts receivable department and check their efficiency and performance and find out the reasons why they have not collected the money on time as per the agreed terms and conditions of the sale, why they have not monitored the account receivable level, and why they have not done the aging analysis of the account receivable. So how many times they pursued it, they were calling the customers, asking them for the payment, meeting them, calling them, using all those resources which are to be used to collect the money. Because please remember, it's not the sale that matters. That you are selling, your sales department is very efficient and they are selling the goods fast because most of the sale is on credit. Now, selling the things on credit is comparatively easy than selling against cash. Everybody would love to buy, every customer would love to buy the product and your services on deferred payment basis. That means they are not paying at the time of the delivery of the goods or at the time of purchasing, but they are going to pay later on, which you call the deferred payment. That means you have given them a credit for 30 days, maybe 45 days, according to the market situation and your competitors. So sales is done, but real sale is that sale when that sale is converted into money. That means you have received all your receivables well on time, that every penny has been collected and the money was put in the bank account. So until the money comes to the bank account, that is cannot be treated as the real sale. In many organizations, many businesses, what happen that the lot of account receivable, the credit sale, those amounts are not collected and they become bad debts. So that means your sale has gone zero, rather negative, because you have invested money, you have incurred expenses to make that sale and which you have not recovered, even not to talk about the profit or to generate surplus. That means your whole money has gone down the drain. Zero benefit. Okay? So the real sale is a sale which must be converted into money. That's the real sale. And for that, the best thing is that you sell on cash. Even you give some incentives to sell on cash, maybe some discount, maybe little extra quantity, maybe you can give them free delivery. Because if you are collecting your money quickly, you are going to save a lot of cost. Number one, the interest which you are paying on the borrowed money, because there is a gap, because you have to buy inputs, you have to buy products which you have to sell, and you have to pay to your suppliers on time. If you not pay them on time, they will stop supplying you the goods. Then it's very hard to establish business relationship with the new customers, because they always ask you about the references, and when they will check the reference, they will find that you are not a good paymaster, you are not paying on time. So nobody is going to give you credit like that. So you must have to maintain your excellent credibility in the marketplace. You must meet your all financial obligation on time. You must pay to your suppliers well on time, so that they can keep on supplying you those goods and services. That's very important. So now you paid for all the inputs and you sold that products, but your money is in the pocket of your customer. Your customer is enjoying on your money. because they got the supply of the goods, but they have not paid you under the credit terms which you have agreed upon, that they will pay you after 30 days, 45 days. They got all the benefit of that items, but they have not paid you. So your money is in their pocket and they are enjoying on your money free of cost. And you are the loser, because in order to make that gap, you have to borrow money from the bank, from financial institution. You have to get loan, and there is cost of that. That means you have to pay interest on them. So interest eats out of your profit. That adds to your cost. But on the other side, your sale is not converted into cash, because that sales include the cost of all your input, your expenses, plus your profit margin. So until your sale is converted into the cash, number one, you are not recovering the cost of your inputs, and number two, you are not getting any profit out of that. So when your customer, they don't pay you, and some of them they declare bankruptcy, and some of them they just change their addresses, and they change the location, or they change the city, or maybe the country. That means they are not traceable. So your money has gone down the drain. Your all sale has gone down the drain. That means the bad debts is a total loss. Then you have to write off your accounts receivable. There is a process which you have to satisfy the tax department of that country, or in Canada it's called CRA, Canada Revenue Agency. So the critical situation in any business is to maintain the liquidity of your business. When we say to maintain the liquidity, that means you have enough cash resources out of your sales. Not that in order to meet the gap, you are putting more money in from your personal resources. No. After establishing your businesses from your own resources, now your business operation must be run by your sales amount, and that must recover your cost, and plus it give you some surplus. That is called profit, and only then we can call your business as a sustainable business. Otherwise, the loss mean that you are eating out of your investment, the money which you are invested, or you are borrowing money which you have to pay later on. So liquidity, maintaining liquidity of your businesses must be of prime importance. Liquidity means that you have enough financial resources, enough money that you can pay all your financial obligation on time before they become due. And that will add to your credibility and your goodwill in the marketplace. Then your customer will be pleased to extend you the credit. So this is very important, to watch your accounts receivable and watch your accounts payable. So we have to find out that why my sale has gone down, and then taking all the necessary corrective actions. And also at the same time, you have to keep a check on your cost of your inputs, because you have to control your cost of sale, cost of production, cost of buying your inventory, and you have to find out ways and means, because you cannot set the price of your product by yourself. If you are running or you are operating in a competitive business environment, there are so many other businesses, enterprises, they are also selling the same products or they are providing the same service. You are not the only one. That means you are not enjoying a monopoly situation. You can only dictate your terms of sale and your selling price until you have an edge over others. Number one, your product and your services are unmatchable. They are of high quality and high standards. Then people are ready to pay you more because they want to get the benefit, the value. So you are supposed to provide the value of your product and your services to your customer. That they should realize and feel that the amount which they are paying to buy your product or services, that has a great value for them. The value is more than the money which they are spending. So this monitoring should be done on regular basis. It's not end of the month, it's not end of the week, it's not at the end of the quarter or a half year or once a year. No. What will happen by that time? If you find out the reasons and your sale has been dropped and your profitability has gone down, time has already passed. Then you cannot take any corrective actions. We can only take corrective action if we take actions on time. And there is a saying that a stitch in time saves nine. A stitch in time saves nine. So everything should be done on timely basis, regular basis. Regular monitoring and evaluation must be done. And then finding new ways. Try to introduce improvement in your product and service so that you should be different in the marketplace. And this is how you can create a loyalty for your business, which is called customer loyalty. Because the customer will only buy your product as long as those product and services, they are meeting their needs to the best and at a competitive or reasonable price. If any of the two is missing, they will switch over to another business, another supplier, another shop. So this is very, very important. Starting business is very exciting. It looks very good. But its management is really a challenge. And you have to prepare yourself to meet this challenge. And if you feel that you don't have that skills and abilities, then you have to cut those skills and ability. You have to get some training. And there are institutions, there are experts available in the market that they will help you to enhance your skills, your capacity, your capability. And this should be a continuous process. It should be a continuous process to improve your skills, your knowledge, what's going on in the marketplace. You have to do the forecasting, which side the trends are going, which side the business are going, world is going, the government policies, international forces. Because if you're not going to keep the pace with them, you will lag behind and ultimately you will run into losses and you will be forced to close your business. So the management is a real thing, and this is a very complicated and vast field. I'll keep on giving my talks on this in my further lectures, how to manage the thing, what the real management is, and who is the manager, and what is the role of a manager in any organization, in any business entities. So thank you so much for your time and your patience listening. I hope you will get some benefit out of this. My whole objective is that to share valuable things with you, whatever I know based on my past experience and exposure. Take care and help others. Be a positive thinker. Always look the things positively, brighter side of the picture, not the darker side of the picture. Okay, and of course you have to trust in yourself. That's very important. You have to trust in your capabilities, in your qualities, in your skills, and be helpful to others. Let's build the community, the society together, collectively, proactively, for the benefit of ourselves, our children, our grandchildren, and our future generations, because we must produce capable leader in every respect, in business, in politics, in every aspect of life. We need a capable leaders, and we have to start it today. Thank you so much. May God bless you. Assalamu alaikum wa rahmatullahi wa barakatuh.